Mark, first of all, thank you very much for making the time. It's great to come up here to Durham, see your offices. And it's probably a great place to start, actually. Tell me a little bit about Atom Bank, why you started it, and also why you decided to locate yourselves up here in Durham.
Certainly. So I started this journey in 2013.
Yeah, so about 4 years ago now.
Absolutely. At the time I was the chief executive of First Direct,
yeah.
Which was, it's a great little business and it was a great job. But I was certainly looking at that time for what I might do next.
Yeah.
I had been doing the job for 2.5 years. And serendipity, I met Anthony Thompson.
He's one of the co-founders.
Yeah, absolutely.
Yeah.
And he was one of the co-founders of Metro Bank and an entrepreneur for some years. And I met him at an event in London, and we struck up a friendship. And he was interested in starting a bank.
Yeah.
And I was interested in that story, and so together we started to plan what today is Atom Bank.
Yeah.
And we're based in the Northeast because Anthony's from Newcastle.
Yeah. Okay.
And he had connections with entrepreneurs in this region.
Right.
And so when we raised the initial seed capital for Atom, it was very much in the interests of the entrepreneurial investors that started us out that the business be built here.
Great. So kind of giving something back to society.
Absolutely right.
Yeah.
You know, they wanted to see a business grow and prosper in the Northeast.
Yeah.
And so a combination of, you know, having some roots,
yeah,
as well as delivering to our early stage investor expectations sees us here.
Yeah, great. It makes you different as well. And being based up here, you're out. I mean, many banks, or I guess the majority of banks, are based in London, and particularly in the area you're in sort of the fintech world, there's the whole buzz of London. But you know, with that goes the London bubble view, and you're clearly outside London. What do you get a different lens on the world then, not being part of that bubble?
Yeah, possibly. You're never really free of London.
Yeah.
You know, regulators are in London, material investors are in London. So
yeah,
I spend quite a lot of time on the East Coast main line.
Yeah.
And so I've not left it behind.
Yeah.
Things are different, but then I've worked in Birmingham and I've worked in Leeds, and so
yeah,
the Northeast
okay,
is not such a big departure for me. And I've worked in London as well. So the perspective is different. I think the agenda is different. There's a lot of people who have struggled to build careers outside
yeah,
the sort of Southeast,
yeah,
if you like, bubble, who welcome the opportunity to do just that.
Yeah.
In a bank like Atom. There's a competition for talent here, as there's a competition in London. Probably the inflation pressures are lower.
Yeah. Okay.
They're not nothing, but they're certainly lower.
Sure.
And the sort of maybe the investment or loyalty or commitment is slightly different. So if you're building a business in Durham, and we're based in Durham,
yeah,
then you know the agenda of the team is to make it successful as much because it's in their community as because
part of
it's
the community.
Yeah, absolutely.
Yeah.
And I think London is different naturally.
Yeah.
Because there's a huge number of people who live and work in London who are not from London.
Yeah.
And who therefore probably or possibly don't view it with the same fondness, maybe,
yeah,
or the same investment as an individual.
And what about, you touched on talent, what about sort of talent like engineering, and even if you're based in London, everyone in London is always talking about how difficult it is to hire great engineering talent. How do you find that up here? I guess you've got maybe a smaller pool, but less people to fight with for it, or?
The competition for talent is fierce, especially in particular areas. So in banking, risk is a fairly competitive area. Yeah. Engineering is another area, but there are some excellent universities on our doorstep. You know, not least amongst them Durham. We work very closely with the maths faculty in Durham already. Okay. Newcastle, of course, and Sunderland, and so you know there's a huge number of talented people here, and the trouble is that historically they would have migrated down south. Yeah.
So now you're attracting them up here.
Yeah, there's an opportunity for us to offer them something on their doorstep, and certainly either as a return to the north, or as a start a career in the north, it's got an appeal. Yeah.
And you mentioned regulators there, and obviously you're a high growth new bank, and I guess the difference between, say, starting a business in many other sectors, say retail or regulation, doesn't necessarily not exist, but it has a much lower profile. Whereas in banking, regulation is I guess a big influence. How does that interact on your business? How much of an influence do you see regulation as a driver for innovation, both for and against, if you like?
Here's the thing: banking is an invention.
Yeah.
It's not a physical thing. It's in essence a set of rules.
Yeah.
So the relationship between regulation and banking is intrinsic.
Right.
And I sometimes I hear the argument that regulation impedes banking or impedes innovation, but it is banking. At its absolute essence, a bank is a construct of rules and regulation. It follows, therefore, that when regulation changes, banks change in response and they adapt to it. The question is, what drives regulation? Okay. It's not what drives banking. And what drives regulation is the performance of the banking industry. And we're on the 10th anniversary of if you like, the banking crisis. So a lot of what we see today in the regulatory environment has been driven through that journey. Yeah. But also a much broader range of influences which drive both the regulator and the banks themselves. And therein you're talking about advances in technology, advances in mechanics, engineering, medicine. There's a whole bunch of influences. Yeah. So at some points, regulation is lagging, and at some points, it's actually leading. Yeah. It's not simple and straightforward to say that it's impeding banking, because in its essence, it is underpinning banking.
Got it. And so that's quite different. Yeah.
Yeah, I think it's just as a natural lead lag. If you want to be challenging about banking, the great majority of true innovation in banking didn't start anywhere near banking. It started in Silicon Valley, or it started in the medical industry, or it started in another part of society. Yeah. And banking has had to respond, and therefore lags it. Yeah. And so it's quite a complex little interaction.
And do you find that in your situation, where I guess you're pushing the boundaries, you're taking new technology, perhaps even new customer behaviours on board, and maybe moving faster than, say, the traditional high street banks? Do you find that you're having to educate the regulators and in terms of what is possible and what customers are wanting?
Yeah,
I'm guessing their background, most of them will have been in the big banks.
Many of them certainly come from the industry itself. Yeah. We have a responsibility to prove and to evidence and to persuade the regulators that the way we address problems of identification or money laundering or whatever compliance problem you may be talking about can be delivered technologically and can be delivered to the same standard as others are delivering through multi-channel propositions.
That's a pretty important role then, really.
Yeah, and it's not unreasonable that we should have to do that, right? Yeah. Because at the end of the day, the law is the law. Yeah. And you're in a position where if you're addressing a particular process in a new way, the onus is on you to convince the regulator that it is in fact robust.
And you're looking after people's savings. It's an important aspect of their life.
It's not a casual thing.
Yeah, indeed. And then how about the open banking initiatives? You're part of the open banking initiative, is that right? You sit on the forum, and I know back at Reevoo there's a lot of excitement around it. How do you see that evolving? And I mean, on the one hand, I guess the big banks, if you take a slightly cynical view, one takes a slightly cynical view that they're all the same, so more openness. Well, are you really going to move from one to the other because you're going to get the same service? They might reel you in with an interest rate that's slightly lower for a period of time, then it'll go back up. But there's a lot of inertia in people moving banks. So does that start to provide an advantage to you, the open banking initiative, as a new bank?
Most definitely. The open banking and the payment services directives, but particularly PSD2, paved the way for an API economy as it relates to the financial services industry. Yeah. The acid test about whether it succeeds or not is less to do with whether technologically or from a regulatory standpoint it will implement or it will happen. It will. Yeah. The question that we should be really asking ourselves is, what will motivate customers to engage in a different banking model, and what, at its most fundamental, what's in it for them? Yeah. How interested is your average customer in shaving a few basis points off a given product, if the trade-off is that it's more complicated for them to do it? Yeah. And so we've lived with the universal banking model and the one-stop shop. And in the past, or even today, they're the same thing.
Yeah.
Universal banks provide one-stop shop services to customers.
Yeah.
And that, focuses on convenience, drives inertia, frankly.
Yeah.
But ultimately also means that the customer's products are being priced through one treasury.
Yeah.
The open banking model has to be as convenient as the one-stop shop in order for it not to be universal. And so I wouldn't underestimate that, because my experience, and I've run a bank in the UK, is you can have a fantastic reputation, you can have a great product, you can have ticked all the boxes you think are important in terms of driving or customer recruitment, and still struggle.
Yeah.
And that's because the trade-off of effort versus return isn't transparent. I think I'll be better off, but can I really be bothered trying?
Yeah.
Whereas if you look at some product classes are simpler. When people consider their mortgage, they shop around.
Yeah.
Because honestly, getting it right or getting it wrong is going to make a pretty big difference to how much money they have at the end of the month. Whereas for your day-to-day banking, because it's presented as free anyway, is there enough upside in something that's been sold as free for me to actually change my behavior?
So it's benefit versus friction. And I kind of moving on from that, then who are Atom Bank's target customers?
I get asked that a lot. The target customer is any customer who's interested in buying one of the products that we're offering. And that may seem like a glib thing to say.
You're offering savings and mortgages at the moment.
Absolutely. Yeah. So we're pretty agnostic about what customer chooses to save with us. We're pretty agnostic about what customer chooses to borrow from us. And frankly, it's good business in a way, right? Because a good bank, and we're a bank, so we lend money and we gather deposits. So to that extent, you can call us traditional. A good bank is self-hedged, it's balanced.
Yep.
It's got a blend of old and young, rich and poor, long and short, big and small, because that creates stability.
Okay.
And so
that in the customer base.
Absolutely. Yeah. And stability is a pretty good thing if you're running a bank, because a bank is a leveraged institution. It's inherently unstable. Nobody wants to really confront the brutal facts of it, but that's actually how banks work.
And by that you mean that we all can't withdraw all our money at once.
Absolutely. There's no bank in the world that could allow all its customers to have all their money overnight and stand up in the morning, right? So and Atom is one of those banks. So it's absolutely good and proper that we should try and have a broad appeal, as opposed to we're focusing on one very, very small niche and that's it. That actually is quite an unstable banking proposition. And the real thing, the real view that I have is we're in the business of providing a service to deliver a valuable commodity. But it is a commodity. Yeah. Money is a commodity. We don't print it. It's not our name that appears on the note. As a consequence, our job is to get you that money as elegantly and as swiftly and as easily as possible, and add as much value to it as possible. And that does translate into price. And we're not shying away from that. Which is that actually, in a commoditized market, the price of the money is the thing that drives the biggest value for you, the customer. Okay, and that price being interest rate or interest rate, whether it's savings or mortgage. I mean, it's obviously it's obviously a very broad kind of customer base you're going after. And I guess with my sort of, if I stuck on a teaching hat, whatever, it'd be all right. Well, actually be very focused and laser-like on your customers, because in the digital journey you can then start to target in the early days personas, etc. Does that create challenges for you or the team, etc., where you're thinking about who is going to be using our services and etc.? Not at this point in time. Right. Does that statement remain true in perpetuity? Probably not either. Okay. So one of the temptations when you're starting a business is to try and solve all the problems and all the challenges out of the box. Indeed, yeah. And to be the finished article on day one. But that's very expensive, and it carries a bunch of risks. And we've chosen not to go down that route, right? So that we may be wrong, we may not have as much time to build Atom as we think we do, but equally, this is a very, very big banking market in the UK. And there are lots of opportunities for us to learn and develop over the next 5 to 10 years. And I do think in terms of so you think time's on your side? Not indefinitely, but do I think that when, for example, open banking implements and PSD2 enacts in January, we're going to wake up on a Monday morning and the world will be different? No, I don't. I think there's going to be a competition for customers and for product sales that may well evolve and change as the year progresses.
Yeah.
But revolutions in banking do happen. They don't happen quickly.
Got it.
And that's certainly been my experience over the last 28, 29 years working in the industry.
Yeah.
So starting from where we're starting doesn't mean that that's where we end. We will evolve our proposition, we will evolve our product set,
Yeah.
but we'll try and do so in a way that actually reinforces the core benefit that we're trying to build in the heart of the business.
Yeah.
And we're also trying to do so in a way that allows us to be successful. In other words, do what you're capable of doing well at that point in time,
Yeah.
and don't overreach yourself.
Okay.
So I do think we've got a little bit more time to evolve and develop Atom as a bank and as a proposition than conventional wisdom might suggest.
And as part of that, the fact that the big high street banks and maybe the banks where you've come from are they've got their own challenges with regulation, Brexit, you name it. That actually they're going to be they're just going to take time to react to the new world.
I think it's partly to do with that. I don't think it's all to do with that. I think it's also to do with the nature of banking.
Okay.
If you've got a 4-year or 5-year fixed rate mortgage,
Yeah.
and you're in year 2, you've got 3 years before it matures.
Yeah.
In other words, the pace at which people can and will adopt new products and new services or new suppliers and new relationships is to some extent driven by the nature of the relationships they already have.
Yeah.
And that then begins to play into a discussion about what role are you playing in this industry? Are you
Yeah.
playing an aggregator role? Are you playing a payment initiator role? Are you doing
Yeah.
both of those? Are you manufacturing products and services?
Yeah.
And there's lots of different roles that you can play in the banking ecosystem, and particularly as the sort of open banking ecosystem begins to evolve.
And how are you acquiring customers? Because we talked about inertia, and most people have been, well, I'm guessing most people have been with the same bank for a long time, and so how are you persuading people to open an account with yourselves?
Price.
Or take a mortgage? Price.
Yeah.
And so that do you see that as your competitive advantage? Is that the sort of your if you had to say, well, what is your single focus in that sort of competitive
Cost.
advantage? Cost. Okay.
Cost is our single focus.
Taking cost out of the banking
Absolutely.
system.
Efficiency and cost
Okay.
is the most obsessive we are about anything in Atom,
Okay.
is to drive the business model such that we become the most efficient banking model possible.
And what does that give to? What does it allow you to do? If you are the most efficient and most cost effective, what does it allow you to do?
Well, it plays right back to my point about what business are we in? We're in the business that at its seat, at its underpin, you have a commodity.
Yeah.
And we see our job to be to provide the customer with access to that commodity at the absolute lowest cost
Okay.
or least friction. So cost enables you to invest,
Yeah.
it enables you to grow. It's not just a question of profitability.
Yeah.
It's the fuel, in as far as we are concerned, to enable us to scale
Yeah.
and ultimately be successful business.
Great. And I guess and provide more attractive products if it's about price, so higher interest, a better interest rate or a better mortgage rate, etc.
Yeah, I think so. But
Is that how it manifests itself to the customer at the end?
Today, that's certainly how it
Yeah.
manifests itself to the customer. We're one of the most competitive savings banks in the UK,
Yeah.
and we have been since we really started to sort of turn up the heat on that in the last quarter of last year.
Yeah.
And the question for us is that a sustainable? And I get asked this a lot, which is that a sustainable strategy
Yeah.
in perpetuity? Well, we're still a relatively young bank.
Yeah.
And so we have a lot of work to do to flesh out and to expand our capabilities in a whole bunch of areas. But we didn't come here to compete as a niche player.
Sure.
We came here to compete against the biggest banks in the UK.
Yeah.
And we believe that they are operationally inefficient.
Yeah.
And
I'm
the
sure you're
data
right.
would suggest
Yeah.
they are operationally
Yeah.
inefficient. So our challenge is, can we outperform them as a banking model operationally?
Yeah.
And because it will take us time to be as efficient as they are when it comes to managing liquidity or managing assets.
Right. Just because of their scale.
Just because of their scale, because they have inertia, because they have advanced IRB, because they've got, if you like, endowment benefits.
Yeah.
But
How
if
are they
we-
reacting to you at the moment?
I'm not sure that they even know we exist, frankly,
Okay.
and that bothers me not a great deal.
No, sure. great place to be, actually, in some ways.
I would be flattering myself if I thought otherwise.
You talked about that efficiency and that cost, and I guess that means you're digital first. What about the human element? How important is that to you and your customers? What's the role, whether it's customer service or that sort of side?
The enterprise may not be visible to a customer in the sense that we are digitally distributed, but everything we do was created by the team here. There's no magic to it. So we have our own engineers and our own designers, and we have our own customer support teams. My experience certainly in the past would suggest that a sense that there's a beating heart behind a product remains hugely important in banking, and the sense that if and when, and probably when,
that's the first direct experience.
It's not just FD, but certainly even prior to that, things will go wrong. It's not a question of if, they will go wrong.
Absolutely.
And when they go wrong, there needs to be a sense that there will be somebody there to help. And they will have empathy, and they will have understanding, and they will try and sort things out for you. So I think it remains a hugely compelling and important proof point, or moment of truth point, I think is the sort of, if you like, the old SAS or Ericsson idea. And it can absolutely make the difference between a loyal customer or a serially dissatisfied, defecting customer.
And then I guess when you're growing, and that word of mouth, and maybe we should talk about that actually. How are you going about acquiring customers? Is word of mouth hugely important to you?
Word of mouth is important, but we have a very simple philosophy, which is produce very simple products, produce very few of them, make them blindingly transparent. And that product has to do quite a lot of work. Equally, understand how a given product is bought. Right, and the class of product that we're selling at the moment is bought through comparison tables, through Best Buy, through aggregators. Because it's simple, it's commoditized, and it's priced. So the word of mouth. Absolutely. The word of mouth is absolutely important, but so too is the core value proposition, which is: are you actually selling something that is a comparable product and is bluntly transparent and is what it says it is?
And what about the trust? How about the trust element? How do you think about that?
A good colleague of mine once described the sort of development of trust as sort of character is action. It's not claim.
Indeed.
And I think in a digital world, more so in a digital world than in any of the sort of iterations of the media that we've seen over the last 20 years, it's very difficult to fake it. And there's not much point in claiming it.
There's nowhere to hide.
Not really. So don't say, and live with the experience, both good and bad. Hold your nerve on the basis that you can't, as another ex-boss of mine once put it, you can't bark at every passing car. So things are going to go wrong, and you're going to have problems. But if you've got any integrity, you've got to stick to the course and know that if it takes you time to sort out all your problems and remove all the wrinkles, the trajectory nonetheless will get you there. And the principles matter a great deal more than a problem on a Tuesday morning.
That's great advice.
I've just been too long in the industry to put my entire trust on great marketing. I think that the era of great marketing and I've loved it. I used to be a broadcast advertiser. I just think it's evolved to the point where trying to dodge bullets or PR your way out of problems is just not.
No, well, you're speaking to the converted. I will completely agree with that. There is nowhere to hide for anyone anymore. Just moving on to team really, and what's the makeup of your team as a new bank, digital, driving efficiencies, and how in percentage terms, how compared to say a traditional bank, how different are you?
I mean, most obviously, we don't have relationship managers or regional sort of heads of this, that, and the other. And the UK is one region to us. We don't have branch networks. We've got a very small contact center. I suppose the split would be about 1/3 of the bank is in change and technology. About 1/3 of the bank is in what might be described as second and third line or back office, head office functions. So we're a bank, you need a chief risk officer, you need the whole risk apparatus. That's still
Yeah.
a fairly significant investment. You need audit, etc., etc.
Yeah.
And about a third of the bank is in banking services and customer facing.
Okay.
What's interesting about it is that the scalability dynamics. So
Yeah.
we're not really in the business of increasing the sort of, if you like, oversight or head office or strategic team.
Yeah.
That's kind of in place.
Got it.
So that third is stable. The
Yeah.
technology team, we're pretty much at complement. We're not looking to grow the technology team materially beyond where it is today.
Yeah.
So we will scale the customer service team, that middle third, but not massively, and certainly not in proportion to the potential asset growth or liability growth that we forecast over the next sort of 5-year period.
Yeah.
So it remains a pretty small thing.
So your efficiency actually increases and increases almost as you grow.
It's extraordinary, actually, the
Yeah.
dynamics. And our challenge is to make sure that we move at the right pace, by which I mean you can move at a pace that requires you to recruit more people,
Yeah.
or you can move at the pace that you can implement technology change. We
Yeah.
prefer the latter.
So I'm conscious of your time, and I'd love to end on a more light-hearted note. Maybe not light-hearted, but strategic. But the announcement you made recently about Will.i.am joining you as a strategic advisor. Can you just talk a little bit about that? What was the thinking behind it, and what role he plays?
Sure. So
Yeah.
Will's a really interesting character. He's a really interesting individual because he's been successful in so many different places and areas. And so he's a philanthropist. He's an innovator. He's got his own tech business focused on audio and increasingly on AI.
Yeah.
He's obviously been pretty successful as a recording artist, and of course makes regular appearances on national TV. So our view of Will is that he's got a pretty unique perspective on development of technology and on, if you like, culture, consumer culture and popular culture. And he's a board advisor, so he's not advertising on the part of Adam. That's not his role.
No.
But his role is to challenge us and to bring an external perspective, and specifically also a US external perspective.
Yeah.
And really sort of shake us and make damn sure that we're developing the business in ways that maybe on our own, left to our own devices, a bunch of bankers, there's a risk that you end up building a rational, logical bank, but you don't necessarily push the boundaries of what's possible. And because Will's doesn't just say it but does it, he's actually invested his own money, and he's invested his own time and energy in his passions. He's just a remarkable individual to be associated with us. We're very lucky to have him.
Great. It's a very exciting place to end. I imagine you must have some really interesting conversations. So thanks very much for your time, Mark.
Not at all. It's my pleasure.
Great. Thank you.